Hello, my name is Ray Franklin. I'm a senior commodity analyst with Energy Professionals. In over 40 years of trading, I have seldom seen a better opportunity than what we see presently in natural gas. And in this video, I'm going to explain why I believe this is so. In my February 25th energy update, I said that the present price levels of natural gas, which are at historically low levels, are not justified by the amount of supplies we have in natural gas. I referred to 3 charts to support my case. The first chart came from a report that I wrote on January the 20th. This chart showed in the last 20 years natural gas prices were below $2 per million BTU only 1.8% of the time, and the 3 previous occurrences always led to higher prices on average the following 12, 24, and 36 months. I explained that this was not surprising, since prices below $2 are below the cost of production. Therefore, weaker companies are forced out of business, and the surviving companies are highly motivated to increase prices to make up for the lost profits accrued while prices were low. This premise is supported by the latest Baker Hughes drilling data. This was released on February 28th, showing natural gas drilling rigs are continuing to decline, and we now have only 110 active rigs, down from 195 rigs a year ago. This is a decline of 43.6% year over year. In my February 25th energy update, I discussed another factor supporting my belief that we are near a long-term bottom. Prices of commodities are always based on the amount of supplies you have of that commodity. If you have a large amount of supplies, the pricing will be low. If you have a low amount of supplies, the pricing will be high. In the short term, there's times when this correlation will not hold, but it always will return to that long-term average. Low pricing always comes with high supplies. Therefore, I asked the question, are the present supplies of natural gas justifying today's low price? And my answer was a resounding no. Natural gas prices started to decline in November due to mild weather, and they accelerated down in December and January when we experienced the warmest start to winter since 1895. This resulted in natural gas prices declining and remaining below $2 since January 17th, but I don't believe they're going to stay this low for long. I based this on quantitative analysis, which is used to measure the value of a commodity, and using this technique, it reveals that today's natural gas supplies versus price does not justify prices below $2, and in fact support prices near $3. The EIA, the Energy Information Administration, at the present time estimates that natural gas supplies at the end of this year's winter heating season, which will be the end of March, will be approximately 8% below the 5-year average. Ending the winter heating season 8% above the 5-year average would certainly justify pricing slightly below the average price, but in no way does it justify pricing below $2. This leads me to the second chart. Natural gas production began to increase due to using hydraulic fracking 10 years ago, and has kept the price of natural gas lower than the previous decade from 2000 to 2010. This chart shows the average price of natural gas for the last 20 years. As you can see in this chart, the average price of natural gas is much lower over the last 10 years. The average price from 2000 to 2010 was $6 compared to 2010 to 2020 when the average price was $3.25. Therefore, an accurate estimate for natural gas prices today should only consider the average price for over the last 10 years. And using this information is useful in estimating fair value for natural gas. As I said earlier, we are expecting that we'll end this year's winter heating season about 8% above the 5-year average. Now, this could justify pricing slightly below the average price of $3.25 over the last 10 years, but certainly that does not justify pricing below $2. Now let's look at the third chart. This chart shows you what happened in March 2016 when we experienced the warmest winter on record, and supplies ended the winter heating season 45% above the 5-year average. Natural gas declined to $1.61 on March the 4th, which was the lowest price since 2000. A price this low could be justified by a record amount of storage at the end of the winter heating season. But as you can see, by the end of the year, natural gas rallied back to near $4. Now, based on the fact that we're going to end this year's winter heating season about 8% above the 5-year average, not 45%, I do not believe the pricing below $2 is in any way justified, and I do expect that the price of natural gas is going to increase significantly as we go into the end of the year. Now, I'm not saying that we're going to go back to $4, though it's certainly possible we could do so, but I do believe we'll rally back at least to the 10-year average of $3.25. In my next video, I'm going to give you further evidence of why I believe we're at historical lows in natural gas. I'm going to be basing this on a couple of factors, but the first factor is going to be related to the inflation-adjusted price of natural gas, which is the lowest in recorded history. I do believe this is going to support higher pricing as we go into the latter part of this year, and is offering traders and hedgers one of the best opportunities I've seen in my 40 years of trading. Thank you for watching today's video, and I do hope that you found it informative.